Hi, my name is Logan Simios, and I am the Managing Director of the Benefits and Financial Services team here at J.Krug and Associates. And today I'm going to introduce you to group captives. Group captives are widely used risk management tools that can significantly reduce the costs of risks for good, safer type companies. So what are they? They are defined as an insurance company that provides insurance to and is controlled by its members. Members that join these captives seem to like the following four benefits. One is reduced insurance and operating costs, and with collective pricing and group purchase arrangements that will typically help reduce the cost per member. And number two is less price volatility. The insurance marketplace commonly goes through different cycles where the insurance premiums really have no relations to the individual loss experience. So by pooling your resources together, these swings can be avoided and costs can be more predictable. Three is the opportunity to earn capital investment income and underwriting profits. So from there, if you figure out when you go out and buy a typical policy these days, you have all the premiums that are paid are either lost or gone, whether you had a good claims year or a bad claims year. So as a shareholder in a group captive, you will be able to earn investment income on your capital premiums, and any unused loss funds will be returned as profit distributions. And companies can earn up to 60% of their premiums back. Typically, those payments are deferred out 3 to 4 years or so and are still payable whether the member is active or not. Number four is increased control in managing risk. And captives work just like any other democratic one member to one vote structure, and that each and every member will have full participation in the decision making relating to claims and risk control. Companies tend to insure commercial business insurance coverages like workers' compensation, general liability, and auto liability within these captives, but they can also insure employee benefits like health insurance and related wellness initiatives. But while there are many benefits of being within the captive, the primary focus is to remove the insurance premiums from the commercial marketplace where they charge excessive premiums and sometimes cannot insure harder risks. Inside the captive structure then, the insurance premiums may be controlled through better underwriting and access to the reinsurance marketplace. Typically, companies will require a minimum of $150,000 of combined premium for these commercial business insurance coverages and about 75 to 100 minimum enrolled in the group health side. The commitment to a captive is about one policy a year. However, there's an unwritten rule of trying to maintain a minimum of 3 to 5 years commitment so you can understand how the captives work, go through several cycles, and then reap some of the benefits that come out of the captive. Members can also be voted out of the captive if they continue to pose a higher than average risk to the group. Premiums are different for each and every member and are based on the last 5 years of loss runs. So is there a financial risk of joining a captive? I say no, not really. And if you think if all a captive was to take all the insurance premiums and put them into a bank account and then hope that the losses or the claims did not exceed those funds, then that would be a risky endeavor. But through a properly structured captive, through a strong captive administrator, through an actuarial firm and a reinsurance carrier for the catastrophic losses, then that risk is minimal. Then all the member is doing is assuming risk that is in a smaller, predictable loss layer according to the industry. Any additional assessments are driven by the member's loss runs, and then in addition, these are defined basis for any assessment of when and how they occur, and they are limited, and all of the maximum amounts are shared up front. From a taxation standpoint, all the premiums paid to the captive are tax deductible, and on the other side, whenever there is profit return distributions, then those are a taxable income event to that member. All financials of a captive are audited by a CPA firm annually. The captive administrator that we recommend and use here at J.Krug and Associates is a company called Captive Resources out of Schaumburg, Illinois. And to learn more about what a captive is, you can visit their website at captiveresources.com. And on the front page, you will see a nice short video called Meet Jim Smith. Thank you very much, and thanks for listening.